9/28, 2012. It is the end of the quarter. We have great price volatility, how to trade put options, how to trade call options. When you're breaking out, the calls were working great yesterday. There was that great big move up. Yet today we gapped down, we popped right up, and at that very moment in time, when we went straight down to $666, and here was the range, 668, 681 on the high of that opening bell, and the put options came into play, and they paid big, and we went down to 666.75 to that support level, and we went straight up off of the bottom. Now, what did we do when we were making this side of the trade? We were buying the calls over here at the very low down here, 410. They were $16 on the high of the day. So when Apple Computer hit 681 and these calls are up here at $16, they went down almost $12 from the close. They have $11.90 range. And buying those calls off of the bottom when that thing hit support, and using our application, and we burned straight up. It was all about getting that wholesale bid where the public got mutilated from $16 down to the SMF entry of 450, because that's where the limit orders were below the market. And we also even had some, in case it wanted to go lower, we had some, I think, at 350, 320. However, when we hit support, it's about how do I take that bottom when that move was there, and how do I buy that 665 call that was right here at that low of the intraday morning, right at the strike price, and they close at $16. So yesterday's big breakout that Apple had, which we traded all the way up, and then we traded short all the way back down, and you can see here on our platform it tested this major teeny line yesterday where this whole breakout started. And then we went straight back up. We reversed and we're in a range, and we got directional price volatility working for a Friday weekly options expiration in a high frequency option trading model and directional price movement in equities. Knowing how to buy, and then you got to sell them up at the highs, because that's exactly what happened in that one there. Now, let me highlight the other one here. That this contract was a 670 call, 1125. It got down to our price target was $1.60, so it hit $1.70, and then they just took off, and now they're pulling back again. And once again, when we hit the low there and had that big burn right off of that bottom, I mean, this thing has got a $14.36 range. That made these calls down here, and buying them down here, buddies, they were $11.90. Buying down here at the $2 and selling them back at $5.50, that was wonderful. And the public, though, they're stuck in them, because they were $11.90 on the close. So the Apple calls, we make money on them because we're down at the wholesale prices here. And same thing on the put side. And we had a great range of $14.36. We had 487 lows. What did it mean? It meant this right here. It meant that these put options, the 685 put options right here, I'll show them right up above here. When we got these at $5.50, they were $18 on the high. These were great trades. When we went straight down, and let me show you once again. Let me show you once again how the money is made and why it was made. Because when we were having this reversal right here, mid-morning on the open, and we went straight down, that meant that these puts went from $5.25 to $18. And a put option is when the price goes down, the put value goes up, and it was all about wholesale value. Now they're marked up $7.40. So both sides, the calls and the puts, based on the movement to intraday, they pay well. Now, here's the wonderful thing. You too can do it. This is the Apple update. The put side to 685. We traded to 680 because we did. And here is the Apple right here, right now at 671. It's got a reversal. That means that the 665 call is coming back down in value. They've already been sold. You have to know when to sell out of the calls, and you also have to know when to sell out of here, out of the put option. That is the mid-morning update as of 10:15 a.m. Pacific Standard Time, how to trade directional price movement using a Friday weekly options pricing volatility with the broader movement of the name of the stock. Short, long, long. Apple's got great trading ranges. I'm going to conclude that mid-morning update. We will go right down to the expiration, that 665 call. They're still getting woodshedded. We're going to put limit orders to buy at 450 right now. Again, when this thing comes back down, we'll let this put side keep going back up in value toward $18. When this sells back down, intraday update from the opening bell to the mid-morning. And the time is 10:15 a.m. Pacific Standard Time. And what a great, wonderful trading option expiration day, making the money.